This is our Mātauranga Session Tikoma Rua, and it is about raising capital. We have got an awesome kai kōrero with us today, Tahana Tippett-Tapsell, who has a whole lot of awesome information to share with you. This one's going to roll a little bit differently in that Tahana's got an presentation to share with you. We encourage you to put your pātai into the chat, and we've got about 10 minutes at the end of Tahana's kōrero to be able to answer those pātai as well. So I'll just start with welcoming Tahana to the pai. Nau mai haere mai, Tahana, ko wai koe, no hia koe.
Kia ora koutou, tuatahi aku mihi, ki te atua ronga rawa, ko te atua te kupu, ka rore ki tōne ngoa tapu, ka mihi ki te kingi Māori a ki tu heitia, poto tau te whirowhiro, te tuawhitu, me tōna whānau, e noho mai nā, i te ahua tapu ana, matua tupuna, pai mairere, ai te wānei, ka tuau i te rohe o tāmaki ma kaurau, ki te taho o rākei, nā reira, aku mihi ki ngā mana whenua o tēnei whenua, ngā ahi kā, o Ngāti Whātua o rākei, kei ngā uri o Tupuriri, tēnā koutou. He taumaha koutou mahi, nei rā, e whai ake nei, huri noa ki ngā mātua, ngā whaia, ngā whanaunga maha o tēnei kaupapa. Anei he whakatauki hei māngai toku kōrero, ko te manu e kaina i te miro nō nā te ngāhere, ko te manu e kai ana i te mātauranga Māori nō nā te ao. Nō reira, tēnā koutou, ko wai ahau, ko wai tēnei, ka timata aku whakapapa, mai make tū ki tonga rero, ko te iwi o Ngāti Whakaue, whakawhiti ki ngā whenua o Mōkai, ko te iwi o Tūwhare Toa. Hoki ki te Waikato, ki te taho o Waingaro Marae, ko te hapu o Ngāti Mahanga, hoki mai anō ki te rāwhiti o Tāmaki Makaurau, ko Ngāti Pāwa te iwi, nō reira, tēnā koutou. So I'm Tahana. I'm currently the investment manager in the Māori investment team at New Zealand Trade and Enterprise. So here we have the mandate, the trade mandate, and also to raise capital for New Zealand entities for growth, which I'll talk about further in this kōrero. Because if you think about the biggest barrier to growth for Māori business, for really Māori entities in general, is access to capital, and that's my view, and I'll talk a bit about that further. But I think before we speak about raising capital for Māori business, I think it's actually good to do an overview of the Māori economy and a snapshot of the Māori economy, where it's sitting, I think where I see the opportunities in the Māori economy, and how I think we can accelerate the Māori economy to hit 100 bill faster than 2030. Kia ora, so that's my intro, and I'll pass it back to you, Katie, if you had anything before I kick off.
Carl, you go and have your kōrero, Tahana. I'm really looking forward to listening in, and please, we welcome your pātai in the chat, and we'll round back up at the end of it. Kia ora.
Rawe, can you all see my shared screen? All good? Yeah, cool, we're on. Cool, so the Māori economy, what is the Māori economy? First, you have to kind of think about how do you define the Māori economy. So my understanding is the Māori economy is the value of assets held by Māori companies and collectively held assets in tribal organizations. And this is mainly held in Māori SMEs. So if you think about these, I see there's tech founders on here and that, you play a big part in the Māori economy. So we're currently at 70 billion, and if you break that down, so about 40 billion of that are held in just under 10,000 firms owned by Māori employers. About 8.6 billion of that is in businesses of about 18,500 self-employed Māori, and 21 billion of that is in trusts and corporations and other Māori structures. Now, if you think about assets for Māori right now, if you think about the triple F, that's kind of where all most assets are tied up for Māori. So first F, you think fisheries, and then you think forestry, and then you think farming. So that's where most assets are held for Māori. So that I've just defined the Māori economy in a snapshot there. Now, if you're to think about, we're currently at 70 billion. How do we get our economy, Māori economy, to 100 billion faster? It's forecasted at 100 bill by 2030. And I'll give my views. These are just my views. They're not exactly, the right answer, but I have a view on how we accelerate the Māori economy. I think number one, access to capital. To grow a business bigger, better, and faster, you need capital. If you think about a car, your car's the business and the petrol's capital. And when I say capital, that could be equity or that could be debt. It doesn't necessarily just be an investment, it could also be debt. And there was a study done by the Reserve Bank, I believe, around access to capital, and it found on average, Māori pay, don't quote me here, but it was about 0.5% more on debt than non-Māori in New Zealand. Now, you have to ask, why do you think that is? Why do you think Māori pay on average than non-Māori more on a higher interest rate on their debt? Now, my view on that, if you think about when you typically when you get a loan, they assess the risk that you bring to that loan. So based on how risky you are is your interest rate. So basically, you have collateral to secure that loan. If not, you're deemed more risky because we can't get our money back if you default on this. So if you think a lot of non-Māori, what I see is that a lot of non-Māori have parents that own assets, they own homes, they own businesses, and their children tend to leverage those assets and secure them against their loans, which allows them to get cheaper debt. And for us as whānau like myself, I didn't have assets that my parents had that I could secure against any lending that I got, like on my mortgage, for example. So usually you'd have to pay a little bit of a premium if you're not securing your debt. So I think that's my view on why I think a lot of Māori pay more. Is because we're deemed riskier because we don't got collateral, we don't got whānau assets we can leverage. So then the second thing, so we can improve access to capital for Māori. I think that's going to accelerate the Māori economy. The second one is, I think it's just around the capability for Māori to actually realize their asset potential. So I think we all know we have a lot of Māori entities that are asset rich, cash poor. So what that means is, you've got assets that have a high valuation, but it's not actually delivering any cash back to you. So you can't actually do much with that asset. But what you see is a lot of people leverage their asset base by getting debt to actually grow their business. And, there are a number of iwi who have leveraged their property portfolio to keep purchasing property, to keep growing. So I think there needs to be more capability in that realizing potential, asset potential. So I think there needs to be more Māori entities that have more capable people coming up that have investment experience that can actually grow the assets without cash, just leveraging the current asset base. And then I think the last one would just be around just getting Māori more involved in the investor community. So when I say that, a large asset might come up for sale, from the Crown or from the private sector, and it is highly unlikely usually that Māori don't participate in the purchase of that asset. And to back up my claim of that, if you look at the last year, the NBR posted the top 10 mergers and acquisition deals in New Zealand, the top 10. And these were infrastructure deals, renewable energy, your telco lines. These are some of the biggest assets last year that were sold. Out of the 10 deals, Māori didn't participate in any of them. So I think that can help support my claim that the Māori investor community is still not at its potential. So I think we need to get more of our Māori entities participating and investing. And then just finally, I think it's just, and I think we're doing really well at this, is just, high quality education to get quality jobs. we're getting high-paying jobs. I think, we do have a lot of cool initiatives getting more Māori into science and maths and tech, which are usually high-paying jobs than average. And I think that's definitely going to help the Māori economy too. Cool. So yeah, that's a snapshot there of the Māori economy. And I did just share my views on the Māori economy and how I think we're going to accelerate it. So just on activating the Māori economy, which I just touched on. I spoke about, historically we've just got underutilized land-based assets. There are probably some people on this call that might have a whānau trust that has whenua that's underutilized. So it's about how do you turn an underutilized piece of land into like a commercial operation that delivers a cash return, and then you can use that cash return to distribute back to your people. You think about if you've got a piece of farmland, it's unproductive, you can't do brick and mortar on that land. What else can you do with it, right? Hey, you might be able to put solar panels on that land to generate an income. There's different ideas out there, but it'd be good to work out how can you utilize your current your land that's underutilized at the moment. Just moving on. Look, I think the Māori population. We have a lot of young Māori. In the future, Māori's going to make up a big part of the New Zealand population, which is going to have a huge impact on our workforce here, our future workforce. We are very tech and digital savvy. We have some of the most entrepreneurial tech companies at the moment. And also our wahine Māori, very innovative and very entrepreneurial. And I think I read a study that our Māori wahine up there is the most entrepreneurial in the world. That's huge for us, for Māori. And just on that last point, I spoke about increasing the greater participation in the Māori investor community. As I said, we're not participating in these large transactions. We should be. We should be there as mana whenua. I think we should be at the table. If there's a big asset for sale, I think Māori should be at the table first, and that's my whakaaro. However, there are some constraints. And what are these constraints? I think that there is a lack of capability at the moment and capacity to realize the asset potential. And that's also just a lack of commercial capacity. Like, let's be tika, like this. The financial markets we live at, the financial system we live in at the moment was not created by Māori the way it is now. So we are adapting to the system, but I will say we are getting a lot more Māori in the investment space, which is really good. We also have another constraint I find is there's limited access to capital for especially your startup. We have a lot of Māori startup companies. It's really hard to get capital when you're at the early stages where you haven't validated your product or you haven't got any revenue going. That tends to be a hard stage to get capital, even from the bank. I'll talk a bit about that later and how we can move around that a bit. So those are the constraints that I see. So yeah, that's the snapshot of the Māori economy in my view. And happy to take partais offline as well if you want to email me. I'm just going to move on to capital raising now. So you now understand the Māori economy, how we can accelerate the Māori economy, some of the constraints. And one of the main constraints is raising capital. And I think this fits in really nicely into my next kōrero. So I think I just want to point out firstly, like raising capital can be pretty hard. Like if you think about from a tikanga point of view, like we're quite whakamā, and I find that for us, it's sometimes hard to ask for money, and I think we undersell ourselves, Like I think the kōrero around the kumara speaks for itself, and I just want to acknowledge that, from a tikanga point of view, it can be hard when you're asking for putia, and I totally understand that, and in this presentation, I will explore different ways where you can raise capital and hopefully give you some confidence and just a bit of guidance on what steps you might take to actually start your capital raising journey. I think firstly, like if you're a Pākihi owner, I think you need to assess your needs. And when I say that, I think it's important to assess actually, you've noticed that you have a business, you need to grow your business, but what's stopping you from growing it? And if it's capital, how much capital do you need to grow your business to the next level? Just actually thinking about having a clear plan. I don't know, you might need 100,000 for working capital to purchase your supplies to actually get your product ready to go to the market, for example. You might need 50K for professional services from lawyers to mayor, whatever it may be. You might need to hire staff to increase your sales. Whatever the use of the capital is, it's kei a koe te tikanga, but it's really good to have an idea on how much capital you think you might need, because it shows that you're prepared, I guess, when you're trying to seek that capital. I think another one too is being realistic about your needs, that you can really create a solid plan. I think coming out, I just started a business, I need to raise 10 million bucks. I think you need to really think about, is that realistic? Because a typical new business will typically raise under $1 million in that kind of new pre-seed stage, is what we call it. So really anything over $1 million, you'll have to have a really solid plan on why you need that much capital. And then I guess one of the main things when raising capital, when you understand how much funding you need, it will help you understand what type of capital is best suited for you. For example, if you only need to raise, let's say, 10,000 bucks for something, I don't think it's worth, going through a full, putting all your investment documentation together to go up to the investor community. It might just be better that you get a $10,000 business loan, because it'll save you time, and it's also going to help you get your business to the next level when you do raise more capital, so you're better positioned. And then even if it's 10,000, hey, you might just have family that help bootstrap your business when it's that early. But then if you're talking, let's say you need to raise 200,000, for example, it might make sense now to go and seek investors. And there's different investors. So if you think there's investors out there, you've got high net worth individuals. So these are people that have had a successful business career, and they've sold their business and they're now looking to invest into the next generation. You've got family offices. So you've got wealthy family offices that are looking to invest into New Zealand businesses. You've got venture capital. So venture capital are just venture capital funds that invest into businesses, and they all have their own investment mandate on what they invest into. You've got Māori investors, so you have iwi, hapu, Māori land trusts that are starting to participate more into investing. And then you've got global investors. So one of the key value adds that we bring at NGT is the global network. So let's say, I could see, what's the name on it? Let's say, Michael, you've started a business and you've created this new tech, and you found that your target market's going to be America. You think that your tech's going to go off in America. You've done all your market segmentation, and you've got a big opportunity there. So it might be natural for you that you seek investment from the US, and that's what we can help do. So just to summarize here, having a solid plan on how much you need to raise, and then understanding what type of funding option is best for you, whether that be equity or debt, and then understanding if it's an investor, what type of investor best suits what you're trying to achieve. So just exploring those funding options further. They all have their pros and cons. I think to explain this at a really basic level, if you think about a bank, right? If you get a loan from the bank, you need to service that loan. So you need to have the cash flow. Like if you're pre-revenue business, you're probably not going to get a business loan, because how are you going to service that business loan? So the cons to getting a business loan, obviously, is it's going to have cash flow constraints on your business. But one of the pros is you're not giving up ownership. You're not giving up equity in your business. And it could be worth more at a later stage. So it's better to use bank loan to grow your business. And then if you just look at equity on the other end, one of the cons is you're giving up ownership in the business. You could give up some of your control as well. But on the pro side, usually if you have an investor, you're not paying back a loan or anything like that. It depends how you structure it with them, but usually what you'll see is they just do an equity investment. Either that might be a convertible note. We could talk about what these instruments are at another stage, but it could be It actually could be a short-term loan from the investor. I don't know how they structure it, but usually it's equity, and usually you don't have to pay that back frequently. They just get ownership in the business, and then they get a dividend every year as a business owner. So there's that. And then, so it's good to think about like what's the best for you in terms of your business at that point in time. What's your best capital strategy? And then I guess another thing you can look at is crowdfunding. I think that's become increasingly popular over the recent years, but it can be quite time-consuming process and it can cost quite a large fee as well. And then just there's friends and family, as I said, but you have to think about usually sometimes families in business, you have to think about what it might mean if you can't repay that family member. That might alter your relationship. So just thinking about things like that as well, to be totally tika with you, that thinking about, that what it might affect your relationship with that family or friend member if stuff goes bad. So it's just being upfront with them in the first place. And then just venture capital, which I discussed, is that usually typically requires giving up some control over your business, and usually they have one of their members come sit on your board. And just on these options, it's very important to consider them all. And as you know, my role as an investment manager, this is my job to help you understand what's your best funding avenue. And I will put it out there that I am a free service. I don't charge you for what I give advice on. So yep, you've got your whole investment strategy, how you're going to raise your capital, how much you need, who you're going to go to, right? You've done all that work, and now it's investment documentation. And when I say investment documentation, it's basically if I'm an investor, and I think I can see Xavier, that's a name there. I can see Xavier, if you've got a business, I'm an investor. What documentation do I want to see from you to make a rational decision whether or not I'm going to invest my own money into your business? So that's usually we want a pitch deck. We know you want to pitch. So I think it's very important you prepare your pitch. I think, when you're talking to investors, they know if you're prepared. They can read you really well if you actually know exactly your business inside and out. So preparing your pitch is very important. I think one of the other key things is networking and building your relationships. I'm a big supporter of anyone who wants to build their networks. And outside of your industry as well, you just never know who you meet. I have so many companies that I've raised capital for from when they went to an event, they spoke to someone, and that someone knew someone, and that someone knew someone, and then that someone came back and invested into their company. And I just think that's just how life works. It's quite a full circle moment. So I always just put it out there, like, you don't need to be so focused. Like, you work in the accounting industry, just networking with accountants. You just never know who you're going to meet in other industries, sectors, different events. And you just don't know how that one conversation is going to change your life. Like, I had a tech company just raised $1 million. The investor was a cousin of someone they met at a networking function. And I think that just backs up that kōrero there. Just quickly, case studies. I want to quickly go through 2 case studies to give you actually put what I'm saying into actual reality. So we had a local drink company that won a large contract from an Australian wholesaler, and they had to double their supply of drinks. So you think this drink company, right? They're making their drinks out of their garage. They now need to triple their capacity or something from 10,000 to 30,000 bottles per month. The garage doesn't have capacity to keep doing that. So they needed working capital to actually fund this growth. And also usually when you have a big customer, like a wholesaler, they won't pay you until at least like 30 or 60 days. So you've got a 30, 60-day working capital deficit. So in that 30s and 60 days, how do you fund your expenses, your working capital up until when you get paid? So usually what we did is we looked at a bank loan. We thought that was the best structure. We helped put together their financial model. We forecasted their revenue based on this new contract, and the bank came to the table. Boom. Yeah, we got a loan in place. We had a working capital facility, and they're now meeting their supply agreements with this wholesaler. Because usually when you get a wholesaler, They don't want you to supply one store, they need all their stores. So that's just an example there of how we raise capital there. It was the best fit to get bank loans because they already had the contract secured. They knew how much revenue they're going to make. They didn't really need outside investment for this, and the bank was the best case. Next case study, we had a milk processing business. We helped them get equity investment. It was the best fit. So they had a local milk processing business, and they're exploring the option of adding a new product. So if you think like with milk, you've got skim milk, you've got full milk, you've got cream, you've got all these different dairy offerings. And to be able to, and then it was the ultra heated treated cream is what it was. So UHTC or something like that. To be able to make that, you have to have a certain facility that's capable to produce that. So what they did is there was a huge opportunity that they saw the market that this new dairy product is doing really well, and they need to start making it, but they don't got the facility to do it. So they needed to extend their current manufacturing facility to offer this. They went to market to raise. They worked out, okay, we need this amount of money to build this facility. They went out to market for investment. And this is where it gets quite strategic. They found an investor that gave all the capital to build the facility, and they offered to guarantee to secure 90% of that product that they're going to be making in the new facility. Like, what a win-win, right? You're giving me, I'm a milk processing company. You're giving me capital to grow, and you're also securing 90% of my new product. I mean, if that isn't a gold nugget, then I don't know what is, but those are the types of things I like to see. So that's a really good win-win situation, and that's a typical equity deal. So just in conclusion, I acknowledge raising capital for Pākehī can be challenging, but I think in terms of your business success, it's probably one of the most important in terms of really growing to that next level. It's really important to explore your funding options, preparing a strong pitch, and building your relationship with potential investors. And also, I think there's a common misconception around, growing your capital and everything is to be wealthy. You're getting all this capital, but if I'm to define what does wealth mean, right? What does wealth mean to me in terms of business? And what wealth means to me is when you have a business and you have mana motuhake where you can make your decisions on how you run your business, you can make your decisions on what you do with your business, and you're not reliant on like a single source of income, like you're not relying on like government contracts, for example. That's what wealth means to me, is giving you choice. And when you have capital in your business, you've got choice to do stuff. So that's how I'll summarize that. And just to whakakapi, as I said, there's my email there. I think the team will send it out. If you do have a Pākehī and you want to start exploring capital raising, or if you have any general pātai, reach out to me. But kia ora, and I'll pass it over for any pātai.
Kia ora, Tahana. That was awesome and heaps to take in, actually. Hold on, I'm just letting someone back into the whare. We have a few pātai for you. Hopefully they're easy.
Yes, please.
I'll start with the first one. So this one's from Bobby, who's just jumped back in. You've already touched on this briefly around tikanga, but putting my pātai in here just in case. How do you see the intersection between tikanga Māori and contemporary economic development strategies shaping the future of the Māori economy?
Thought they were going to be easy, but okay, I'll have a crack at this question. So if you think about the reason why I think Māori should always get the first opportunity in large assets in New Zealand that come up for sale, or anything like that, is because I genuinely think we're the best owners in New Zealand, because we're long term, we're very value focused, and we're not going to sell to the highest bidder from any international person, and I always, that's what I say, Māori are always the best to own assets here in Aotearoa, and it's something I always talk at the table with the government as well. But in terms of tikanga, like I think one of the things I notice with Māori is when you have an investment opportunity and you're looking at stuff like if you go to non-Māori, the first thing will be like, what are the underlying financial metrics of this deal? Like, what's the commercial opportunity, right? I want to know, boom, that's straight away out there. I go to Māori, I'll be like, okay, yep. Who are the people involved? Who do we want to partner with? Is there value alignment, between us? Number one. Number two, what is what is the commercial return? Because you need to make a commercial return to keep operating and pay the runanga, the dividend to support. A lot of us on here have probably got scholarships from our iwi studying, and remember, whānau, those scholarships don't come from nowhere. That money actually has to come from somewhere, and having good commercial operations is where that money comes from. But one of the big things is looking at, if you look at 3 so you got your commercial, you got social, and you got environmental. Those are the 3 that I find Māori will look at when looking at investments from a tikanga point of view. I'll take you through a recent greenfield deal I was involved with an iwi in the Bay of Plenty. So they had a dairy farm. It wasn't doing too well. They didn't have many people working on the farm, and they wanted to think about how can we convert this dairy farm into something more productive. So you use these 3 right? So what it came back is to make a kiwi fruit orchard. So commercially, the kiwi fruit orchard is going to generate more revenue per hectare. Tick. That's a tick for commercial. From a social point of view, it's going to employ 6 more people from the runanga. So from a social point of view, you're creating more jobs. It's a tick. And then from a te taiao point of view, dairy operations are a lot, from my understanding, dairy operations are a lot more harsh on te taiao than a kiwi fruit orchard. So if you tick all those that's kind of a tikanga approach here that I find is that you're considering not just the commercial return, but you're also looking at the social and environmental impact for your people. So that's how I'd answer that question.
Awesome. Kia ora tahana. I'll move right on to the next one from Te Ariki. Outside of the PSGEs and trusts, what's the state of the Māori investment supplier market, and are there many Māori-owned VCs / high wealth Māori individuals in the market?
Good pātai e te whanaunga. Te araki, bro. Good to hear from you. It's okay. Just to answer that, no, there isn't any Māori VC. But watch the space. There could be. I'm not saying there is, but there could maybe be one soon. And just watch the space on that. And then in terms of, wealth individuals, te araki. So there is a big uptake in a lot of what I'd say like Māori financial advisors out there that I know of as well, that are starting to do a lot in terms of more educational pieces around growing wealth for whānau. If you also look at I have a lot of admiration for like Ngāi Tahu. They have their whairawa, their savings program, and whairawa has helped a lot of Ngāi Tahu uri get into their first home. I'm a big advocate for that. I hope to see more iwi, more hapu doing things like whairawa. It's just getting whānau, whether it be $1, $2, just getting used to saving regularly, I think is important. But yeah, in terms of the main question about around Māori VC, there isn't yet, but there could be soon. So watch the space on that.
Tēnā koe te whanaunga.
Kia ora.
Kia ora. This one's a pātai from Saltese from Oricon. Her pātai is, how can large non-Māori businesses best support the Māori economy?
I think in that view is just there's many ways, I guess. I think thinking about your procurement in your business, about having an allocation to supporting Māori business to fulfill your procurement, which is what I think we see with Amotai coming out and driving that. I think it's about creating internships specifically for Māori in your business where you can help grow them, to be the next you of your Pākehī. Partnering with your local mana whenua in terms of meaningful partnerships and delivering educational seminars if you're, engineering firm around how do you get more of the local Māori into engineering. But I think mainly overall it's just having a genuine aspiration to see the Māori economy grow. And I think if you have that genuine aspiration for that, I think you'll naturally work out how you contribute to that. And as I say, I believe that for New Zealand to be successful, like to really achieve the most success we can as a country, the Māori economy needs to be flourishing. The Māori economy isn't flourishing, I don't see New Zealand flourishing. So I think it's in the best interest as well for non-Māori to grow the Māori economy.
Taui, kia ora. A quick one. Do you help Pākehī raise capital from PSGEs?
So is that question saying if you've got a Pākehī and you're looking to raise investment is to get a PSGE to invest into your Pākehī? Is that how I view that question?
That's the way I'm reading it. Candy, if you're online, just give us a
Candy?
Yes, that's correct. So I have a tech Pākehī building AI for to protect provenance in our digital media. So I'm looking for iwi investment rather than private investment from foreigners. I would prefer to keep this technology, especially with protecting data sovereignty.
Ka pai. Patai pai tira, that's it's very common that we get Māori Pākehī that their first priority is to seek capital from Māori investors, and Māori investors can be PSGE, can be hapu, can be Māori business, can be Māori individuals. But to answer your question, yeah, like what the process I run is once I understand your business, I have a really good feel of what a lot of iwi and hapu are seeking to invest into, what their kind of investment strategy is. So I'll have a good understanding of, based on your business model, based on your financial model, based on your offering, your business offering, I have a good view on what Māori entities might have interest to invest into your business. And then secondly, how I run, tikanga I follow, Candy, sorry, I didn't hear your iwi, but for example, so what was your iwi, Candy? Sorry.
Oh, that's heaps. Tainui, Maniapoto, Urake, up to Tairawhiti, up the top.
So how I would structure your capital strategy is that I would actually approach your own iwi first. We have whakapapa as like a mana thing to give your own iwi an opportunity. And then if they are not positioned or don't have interest, then look outside of your own iwi. Well, that's just the way I operate anyway. And just in addition to that, like, let's say I have like a government asset, like let's say a government property comes up for sale. Let's say it's in central Auckland, and then they come to me to help sell the asset. I'll go to, like Ngāti Whātua, I'll go to them first as, it's a mana thing. They're the mana whenua. If it was in the Waikato, I'll go to Tainui first. If it's in Gisborne, I go to Paidao first. And that's how I do it as well with Pākehī, to go to your own whakapapa first. And then, because you might have an uncle and auntie like, oh, why didn't you let me look first? At the marae, they'll ask you that when you're having a tea with them. So that's how I operate anyway.
Good boy.
Yeah, kia ora. Yep, start in your own backyard.
Kia ora. So we've got a pātai from Karaitiana, Wilson, and it is the Waitangi Tribunal a good instrument for securing access to the large infrastructure purchases you speak of?
Yeah, well, so in a treaty settlement, right, you have, so I'm not a lawyer, but I've come across a few things now in my governance role with iwi, and when you look at like the commercial redress section, there's a part where it says first right of refusal. And what first right of refusal is, there's a list of government assets, right, that a particular iwi can purchase those assets from the government through their first right of refusal, and they can exercise that, for example. So let's say, for example, sorry, there's the first right of refusal assets, but the issue is that a lot of our iwi don't have the capital because they're usually capital intensive. You need a lot of capital to make these purchases. They don't got the capital to actually purchase these assets. So they usually forego them because I think after 10 years, these assets are I think you have to exercise your first right of refusal in 10 years. And I'll give you an example like Ngāti Toa, Rangatira in Wellington, in their treaty settlement, they had about $300 million worth of Crown schools in the Wellington, that whole Pōneke region, that they could exercise and purchase all these schools. $300 million. I mean, no one has $300 million in cash, right, to make that purchase. So what we did is our team and a few others assisted Ngāti Toa in raising that capital. So debt syndication and also a bond issuance, raised the capital, and they purchased all of that. So this is to your question. They purchased all the assets to exercise their right of refusal, because no one can just buy a Crown school property. You actually got to, you can't just do that. They had the right of first refusal. They bought $300 million worth of property. And remember, these got like 100-year leases, for the school. And then they became the biggest landlord to the Ministry of Education overnight when that transaction was done. And you think about something like 20 years' time, they're going to be freehold on those properties. And remember, the income from the government for these properties is servicing that debt. So in 20 years, they're going to be freehold on all this property, and they're going to have, you can probably assume that those valuations are going to go up on the schools to at least 400 million in assets freehold, and then the passive income as well from those properties that the government will still be paying. So I think to think about those infrastructure deals, I always think first right of refusal, yes, to exercise that in the treaty. And then I genuinely think if an infrastructure deal comes up for play, I'm of the view that Māori should see the deal first. Some people might not agree, but that's just how I operate anyway. I think, as I say, Māori are the best owners to have, especially on infrastructure.
Awesome. That's an awesome example you've given there, Tahana. I've got one more pārtai from Nathan. And Nathan Blair, who's asked, have you seen any iwi working together to invest in national assets or investment solutions?
I have. So just on that Ngāti Toa deal, we went to like Māori entities right up north to the deep south, and we did have a number of Māori entities participate in supporting Ngāti Toa. If you think about the kōrero, koha atu, koha mai, so like you give and receive. So we had a number of Māori, that's an example. And then another example, Akaroa salmon, which is in the South Island, came up for sale in the hapu there. They didn't have the necessary capital to make the full purchase of Akaroa salmon, but then Ngāti Porou in the East Coast, we did know that they were interested in salmon. So they came to the table and they did a JV with the hapu, and they purchased Akaroa salmon together. So that's just an example. But it's becoming really, really common that Māori are collaborating to invest together. And the reason I say that is it helps de-risk the investment when you've got more people involved. It usually makes the due diligence of the deal cheaper because you're sharing the costs. And then also, I guess one of the main things too is bargaining power. So if you're bringing a collective of Māori with this amount of capital, you've got bargaining power. Think economies of scale. It's basically, hey, if I buy one fish, I'll pay $1 per fish. But if I'm going to buy 10 fish, you'll probably give it 70 cents, economies of scale. And think about that in investment. We've got Māori collectives coming together and they're getting better deals because they're coming in with more power. So there's that, what I'm seeing. And I think one of the main things is iwi have natural alignment with each other. So there's never a question on that kind of value alignment between investment partners, because it's naturally usually there that you naturally partner with them. And usually what I would see, like if I got a deal and I've got two iwi involved, I don't have the mana to like coordinate them two together. Like the mana, what I usually see is they have their person, like they know who their person is in their iwi to meet with that person in their iwi, like they know who the right people are to have that kōrero. So that's a discussion I leave to them. What I do is I just support and make sure that the deal is prepared to the best of my ability, and then that whole tikanga and that whakapanaungatanga thing, like kei a rātou ngā iwi te tikanga o tērā kaupapa. But awesome pātai.
Kia ora. I just have one last pātai, and it was about those 3 finalists, Māori businesses in the New Zealand High Tech Awards.
Yeah.
You just briefly kōrero about how you gave them tautoko.
Yeah, sure.
Them with
Sure.
right?
So at the High Tech, there's an awards coming up, whānau, called the High Tech Awards. And there's a category called Māori Kamupuni o Te Tau. And there's 3 finalists. And the 3 finalists, every single finalist, I help them do their capital raise. And each one of the raises were in excess of $1 million each. So these are 3 Māori tech companies. And every out of all the 3 companies, I helped secure a Māori investor on each one. And I think what's quite significant about that is if you think historically, Māori entities have not invested into tech. And, you know, the tide is turning a bit where you're seeing that, hey, actually, tech is a huge opportunity to grow your assets. Because if you think like how I said, like forestry, farming, fishing, the 3 Fs, like a lot of that is, you know, like weather dependent. You think like cyclones and that, you've got farming, cyclones can really affect your operations. If you think about if you're doing fishing, you're selling, you know, kaimoana ki te ao whānui. If you have something like COVID and then all your exporting gets shut off, you know, that there's significant events that can really affect those sectors. And if you think tech, like it's not weather dependent, it's not if the borders are shut, usually like, you know, it's quite a good sector to have on your asset allocation. And it helps diversify as well. So yeah, hopefully that answers the pātai there. But overall, I help them with their investment collateral. So investment collateral is a pitch deck, an investment flyer, and their financial model. And then I help connect them to the investors to help fulfill their capital raise. And those were all done in the last financial year.
That's amazing. I think you're going to have a few emails after this, Tahana, so you might be quite busy. Hope you're ready. But
all good.
I can see from the list of people listening in, awesome Pākehī, awesome kaupapa. So I think, yeah, some cool kaupapa will come through your doors soon. Any final whakaaro that you want to give to our hapori before we close this kaupapa up?
Yeah, kapai. I actually just seen a pātai come through directly around why do you do what you do? So that's a good part. Like if I think, okay, firstly, you know, for me now as a father, my purpose has changed, and I think about my tamariki and then my future mokopuna, and you think about leaving the world in a better place. And you know, you think about, so I work in the investment space where I'm helping Māori. My role is to help Māori commercially. And what I mean by that, so if you think about the issues we face as whānau, right? And I faced this growing up, you know, I faced housing issues. I grew up in a Māori home, in a large family home, congested into small spaces, education access. I didn't have any support to go to university. It was lucky I got a scholarship. You know, these issues that we face, right? Education issue, access to quality healthcare. I've never had health insurance when I was, you know, I've never heard of, my parents didn't, my grandparents didn't. So all of these issues, right? The underlying fundamental thing for all the issues there, I think, is wealth. It's, you can't beat around the bush, it's wealth. And when I mean wealth, it's having choices. If you've got access to wealth, you can get the best healthcare. If you've got access to wealth, you can get your own home. If you've got access to wealth, you can choose where you study. You know, these are the underlying, wealth gives you choices to do what you want to do. Now, if you think about, you know, if your iwi helping in the runanga doing this distribution to their people, that money has to come from somewhere. You can't rely, you think about mana motuhake, where you can't rely on the government to keep funding our people's aspirations. That's not mana motuhake. Hey, we do pay taxes, so we are entitled to some of that stuff, but we need to be self-reliant. So if we had really good commercial operations, so we've got really good commercial decisions, and we've got really good commercial operations making good money, good cash flow, all of that trickles down, because the role of the commercial entity for the iwi is to pay a dividend to the runanga. And if they're making good commercial decisions, they can pay more dividend. And if you're getting more dividend in the runanga, they can pay more scholarships, they can help with housing, they can pay more health. You know, so why I do what I do is to help Māori succeed commercially, because it has a direct impact into the social outcomes for our people. And yeah, hopefully that answered that partai.
Man, that's so inspiring, Tahana. I don't know about everybody else in the room, but I'm really inspired and excited about the Māori economy, and about the potential that exists. I heard about loads of things that were happening that I didn't even know were happening. So you know, thank you so much. Ka nui te mihi ki a koe, e te puna Mātauranga pūtea, tēnā koe. Thank you so much for sharing your knowledge. I'm sure we will receive your email so that people who want to connect with you can connect with you. We will upload this so that the rest of our hapori who weren't able to be here can come and access it as well. But from us, the hapori, thank you so much. Ka nui te mihi ki a koe.
Ngā mihi hoa, and I'm in Tamaki. My office is in the viaduct, in the downtown viaduct. I have an open office. If you want to come have a coffee, have a kōrero, all good, no mai haramai. And I put a little plug out there, eh? I've got a little Pākehī on the side. I'm just a little shareholder. I have a called Al Cacao. We make chocolate. Check us out if you want. Yeah, if you like a Māori-owned handmade chocolates, and we manufacture and make all our chocolate here in Tamaki too. So yeah, give us a check. That's L-A-O and then C-A-C-A-O, I think. Yeah, cacao, I should know. And yeah, we're pretty proud little Māori business doing some pretty cool stuff. And maybe you might see us in Air New Zealand on the Kuru Lounge and the flight soon, which will be good.
I can attest to that chocolate. It's amazing.
Oh, kia ora.
I've received some of that in the mail, and it's
Have
like
you?
the best of the best. So
Awesome.
yeah.
Thanks, Steve. Yeah, kōrero. Email me if you want to.